Good evening, option traders. This is Sam, the Trader Geek, with your weekly options review. It's Sunday, May 12th, 2024. Hope you had a great weekend and happy Mother's Day to all the mothers out there. Well, we're going to start off by looking at last week, which was pretty positive for the markets overall. We see that the mid caps kind of led the way in all the major indices, with the Dow Jones just a smidge under the DIA, and the weakest were once again the micro caps. And actually, NASDAQ did okay, Russell 1%. No negative indices last week, so it's pretty good. The month is shaping up pretty well, but as you can see, they still have not overcome the weakness of April. So this quarter to date is all in the red, with the Russell or the small caps and the micro caps still deeply in the red. But year to date, everything is up. So this is a bull market after all. SPY basically up the most. Followed, of course, by the NASDAQ, and bringing up the rear are the microcaps and IWM. We need lower interest rates to get those indices in better shape, since they are more effective by higher interest rates because of their size. Sector analysis for last week. Utilities continue to be the pseudo AI play, up 4.18%, fast becoming the strongest sector year to date, except for communications, which includes, of course, Meta and Google. But utilities is the hot play these days. Momentum begets more momentum. And of course, real estate bringing up the rear, down 5.62%, with lots of concerns over the fate of commercial real estate in a rising interest rate environment, with a lot of commercial properties and office buildings. Not sure what they're going to do with them over time, and there is a little bit of concern over the commercial real estate market. And for the month, most of them, everything is in the green, and some of them, like the utilities, of course, are solidly in the green. In fact, it's the only sector that's green across the board year to date, quarterly, monthly, and weekly, with consumer discretionary, no doubt brought down by Tesla a bit, which is not being helped at all. But Amazon is not able to overcome that weakness in Tesla overall to give the consumer discretionary a red mark for the quarter. Switching up to industries, and we can see that lots of green, most strongly gold miners, still overbought and still hanging in there with gold. Insurance, second best performer last week, and you can see the rest here. Two sectors that were pretty negative: alternative energy and cannabis. Solar, of course. Odd to see social media down, given that Meta was up pretty well last week. But if you look down here in the basement again, alternative energy sources, worst two performing industries by far year to date. Don't know what that says, given that we're trying to go green. Cannabis, the strongest sector year to date, up 33%. That one's been beaten down for years, so kind of a reversion to the mean. Gold miners up 13.67%. And regional banks are in the red for the year, to the tune of 4%. Pretty odd, given that the regular banks, insurance is up 13.38, and the rest of the money center banks, Citibank, Wells Fargo, Goldman Sachs, all of these other financials, big banks, are up on the year. Taking a look at the Magnificent Seven, as I said, Meta was up the most last week, and Tesla bringing up the rear. Not so magnificent, being down 32% on the year. That's not good. And Apple starting to show a little bit of turning the corner, but still down 5% on the year, down 0.18%. After the earnings and the big buyback announcement. I thought they would have some follow through after earnings, with Microsoft up 2%, good for one of our plays, NVIDIA up 1.23%. And for the year, bringing up the winner being Meta. And well, actually, it's NVIDIA, of course. How can I forget? And then Meta, with the rest doing okay, except for Apple and Tesla in the red. Taking a closer look at Friday and what happened, we'll come over here and see that we opened pretty strong in the morning, but spent the rest of the day giving a lot back. So you can see that the QQQ is open 0.34%, and the rest of them also about a third of a percent up. But you can see that we faded throughout the day, and especially faded on ARKK, down 2.81% after opening positive. Same with IWO, small cap growth, closing in the red. And another way of looking at it is to see the closing range. And obviously ARKK, the worst performer, closed at 4% of its daily range, the bottom 4%, 13% here. And DIA being the strongest, knocking on the door, or the Dow Jones is knocking on the door of 40,000. We'll see if we can get there. And then we can take a look at what happened on Friday, strongest being telecom. We're seeing a rotation somewhat last week, and broadening out to more value names like Cisco and other telecoms. We had semiconductors still strong on Friday, or at least opening up pretty strong, giving some of it back. Telecom held on to its gains. We're seeing strength in staples along with the utilities, and those are pretty defensive. But overall, you can see that most of the industry's lost steam from the open, and we'll have to see whether we see broad-based follow-through on that weakness, given the economic reports we're looking at. That's not the chart I wanted. It's about 9:35 Eastern time on Sunday night, and the futures are pretty much flat. You're looking here at a daily chart, and here a weekly chart, and there's nothing bearish here that I see, except for, as I've mentioned before, some divergences in various indicators. But seems to me that we want to go back and challenge all-time highs. And speaking of the week we were just in, if we take a look here, this is where we settled. On Friday, we had a doji candle for the SPX, and our new expected move for this week is about 73 points almost, which is odd given that it's only 10 points more than last week, given that we have a consumer price index and a producer price index coming up this week, that we'd only have a 72-point range. In fact, last week we had some days with a whole week's worth of range, 67 points in one day, which is more than the expected move for the entire week. But as you can see here, this is what this level was the upper bound of the weekly options implied expected move at 51.90. We closed the week outside of that move, breaking the streak of 2 weeks inside, or breaking the last week's inside the expected move. And what's going to happen this week? Well, with a 72-point expected move, we could be as high as 52.95 or as low as 51.50, pretty much. That's our range of 72 points from Friday's close. And you'll note that I've left in kind of last week's implied moves, just kind of for reference, and I'll take those off later in the week. But 72 points with that level of options implied move, I would not be a seller of short-term options. If you're going to sell options, you want to do them in the long term. And given that volatility is so low, look for high implied volatility or high volatility ranked stocks, because selling short-term options on the indexes is going to get you in trouble. I'd rather be a buyer of options than a seller of options in this very low volatility environment. And speaking of volatility, take a look at the VIX, as we always do. Here's the daily chart of the VIX, and of course it's been elevator down, escalator down, whatever you want to call it. We're nowhere near the lower Bollinger Band, but we keep dripping lower. And even tonight, that's no exception. We're down a little bit, so we are getting a little bit complacent. The VIX is pretty low, and we still have a situation where the VIX options are pricing in a lot more expensively. The calls are a lot more expensive. We closed Friday at 12.55, and $1 out of the money is 13.5, and those are priced at about, let's call it $1.47. Go $1 out of the money on the put side, and there's virtually no bid. So there is some accumulation of protection, and probably because of PPI and CPI this week, and we have Powell speaking on Tuesday. So there is some protection being bought, although when you look at the charts, there's nothing that looks bearish about them, but obviously that can change in an instant. Take a look at what's coming up economically this week. A lot of data, obviously, producer price index, as I mentioned, consumer price index, both this week. Lots of other stuff sprinkled in here. Don't see the Fed heads on this particular schedule for the week, but you can see that Philadelphia Fed on Thursday, building permits and housing starts also on Thursday, and industrial production. So lots of reports on Thursday, new jobless claims. And oh yeah, did I mention that this is an monthly options expiration? And speaking of options expiration, this is a study done by Quantifiable Edges that I've borrowed, and it shows basically over the last 54 years, taking each month's options expiration and kind of doing a tally of the net profit or loss if he had gone long SPX calls on Friday before and then exited them on Friday's expiration. And in the case of May, it tends to have a little bit of a negative bias for options expiration week. Of course, there's lots this week that can throw things the other way, and it's just one data point and many data points that will affect what happens this week, other than normal monthly options expiration shenanigans. Again, I would be a buyer of options, not a seller of options at these volatility levels. So be careful selling very short term or especially zero DTE options. We're going to see a bunch of volatility. And I think that 72-point move is woefully inadequate to account for what we might see this week in a day, let alone a week. So let's take a look at our open trades and call it a night. I'll make this a little bit bigger. BABA starting to recover a little bit. A lot of time on this. We're still down about 34%, but if China is indeed catching a bid, BABA will go with it. CCJ puts up 80% on our way to our 5-cent target. Chewy lost a little ground. This one seems to be trying to hammer out a bottom. I think we'll get there, but this has until June. Obviously, we have a lot of time on it. Caesar's Palace was up a little bit for us on the first day, but on Friday it gave a bunch back. And quite honestly, a lot of stocks last week lost ground on Friday, profit taking ahead of the weekend. So this one has until January. So this is a long-term play, not yet ready to go. Microsoft up 84% on this put that re-rolled. Not a bad deal. Just keep holding on. Lots of decay to go. NVIDIA, seeing that it's around 4 cents now. So this one should be closed on Monday morning. I'll put this one, I'll set it to close so we can close this on Monday since it is under our 5 cent target and we have one more week before earnings. I'm not sure. I looked at the options that there's a lot of premium in the next week or so, and I'm certainly not going to sell options into the earnings week, which is next week. So we'll see if any opportunities arise to sell any premium in NVIDIA for this week. On semiconductors, getting close to our 5 cent target that expires this week. Here's another one, PANW, hitting our 5 cent target. And we're going to close that one tomorrow. So we want to close anything that is at 5 cents or less, RCL. Again, another close for us tomorrow. We should be done with these and giving us nice profits. Our call spread in SPY we still have on, and our next target is $11. The other day we came very close, and we do have about 19 days to go on this, so we're in pretty good shape with this one. And even though we have that particular play on as a call spread, I opted to open up a strangle or a straddle in SPY given the action and kind of the uncertainty, especially when we have a lot of events coming up this week that could take the market either way. And went out to June 14th, giving us about 35 days from Friday to be right on one or both ways. I split up the calls and the puts separately to be able to profit from them separately. And we may or may not close them together depending on how fast this works. But in any case, we've got a long call here and a long put. So we should be able to play both sides, assuming that we either go up to the all-time high and just blast through it, or we just bonk our heads and come right back down. TLT, still not seeing the big move up on TLT. Still have a bunch of time on this one. We took one profit target, but we ought to be seeing more strength from the bonds, but we are not. Tesla had a bad day on Friday, so this one is threatening on the downside. It's not looking good, but this is a case where it could come down to the last few days. And if we do come closer to our stop, but not stop up, I might roll this out in time to give us more of a chance to make this particular trade right. I do that very often with puts or put spreads that are looking good, but we just don't have enough time to get them to work. Tesla, we just talked about a TSM, another one where we're approaching the net. Well, we hit the target number 5 on Friday. So if you didn't take your profits on Friday, be sure to do so. And then our next target is set at $13. You'll notice that I added another column for target 6. And I think that's going to be the last time I add a column to this particular sheet. And we shouldn't really go beyond 6 price targets, but this one's been a really good one for us. Walgreens Boots, back to regret again. We're down about 23%. I have about 40 days to go on this one. Hopefully it gets in gear, but we did make a new 52-week high on Friday, so that 52-week low, I should say, and that's not a good thing, but we'll give it some of the time that we allotted, and we'll kind of see where it goes. It's an 80-cent option. So we should see it getting gear soon. Otherwise, we might just take it off. Walmart has earnings on Thursday. Still haven't had any movement to take any profit targets yet. So by Thursday, if we don't have a cushion or profit target, we will take this off. Hopefully it will be for a couple profit targets. If we do have good profits in it, then we might leave some on. But my plan is to take this off before earnings, because this one will collapse if Walmart doesn't move significantly. And lastly, I think it's working on its fifth down day in a row. XBI, the biotechs just can't seem to get out of their own way or get going. We took one profit target on this, but we're kind of stuck in the mud. Again, we have until June 21st on this particular play. Well, that's all I have for you tonight. I hope you enjoyed this video. If you have any questions for me, you can find me in the forum or on Twitter at TraderGeek. Thanks for listening, and I hope you have a great trading week. See you next time.